Ever since the internet's come out, I've been hearing, oh, retail's done, it's over. But the bottom line is, to me, people love to shop. People like to go into a store. They like to look at something. They like to touch and feel it. And so I think it's always going to be there.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Stephen Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Stephen Silverman. I actually have Stephen in the studio today. Stephen, welcome back to the real world.
Well, we're socially distant and keeping in compliance.
Actually, worse than that, I
have to look at you, though.
Well, you really don't have a clear path because, one, I have you sitting outside of our normal studio in the hallway, and two, I made you put on a hazmat suit so you can't spread disease throughout the office.
Yeah,
and that's the only way I feel comfortable. But you're out there, but you're close enough to be recording in the studio. So welcome back to reality here, Stephen.
Well, let's get going. So our listeners have been emailing and talking to us during the COVID crisis. Things keep evolving and changing, and opinions keep changing of where we're going. What kinds of things have you been hearing, Eric?
Well, we've been on the phone. First, this thing's been a roller coaster for us. It's from the beginning, it's been a challenge because, first of all, we all thought we were going off the deep end. We're just going off the edge of the cliff, and nobody knew. And now we're starting to see a little bit of clarity. The smoke's clearing a little bit. And the situation, although we're still going to be in this for a while, Stephen, it's still going to be a while, and no one's going to feel, the bulk of people are not going to feel comfortable until there's a mitigating drug, whether it either be something that greatly reduces the amount of death or there's a vaccine. But it does not appear that the most dire predictions are going to play out. And we're starting to see some clarity. In fact, we have business that is coming back. We're starting with really all the asset classes. We have activity in every one of the asset classes right now in the firm. And I think the outlook is starting to turn. Are we where we were in January 5th of 2020? No, but you're starting to see sprouts of life. Would you agree with that, Stephen?
Well, look, it was a crisis. It is a crisis, but it affected people differently. There are some sectors that were badly mauled and will suffer, but other asset classes continued and businesses continue to run, and they're still doing business. They need to lease space. There's people selling and there's people buying. It's just approaching it differently and assessing risk a little bit differently.
Exactly. And let's be clear. We're not through it yet. It's not over. By any stretch of the imagination. A lot of this stimulus from the Federal Reserve and from the government, the Treasury, is candy right now. Eventually, we're going to be back full swing on evictions and on bankruptcies. When that starts roiling the market, that'll be another piece, another shape of the prism, right? So we're not through it by any stretch. But there are reasons to believe that we are not headed into the abyss as many of us felt on March 21st. We're starting to feel a little bit better about, where we're headed. And of course, that's being reflected in the stock market as well as the real estate market. Stephen, we had a great review. Encourage all of our guests. As always, it helps us tremendously if you go online and leave reviews. Guests will not only find us there, but they also, if we're inviting guests to come on the show, they're seeing you guys leave responses, and it helps them make a decision of whether they're going to invest their time with us, and us meaning the Invest Florida show and the listeners. So you're helping yourself when you do this as well as you're helping the show and us. But F. Joe from New York left a review on iTunes, and he says, I live in New York and I still listen to this podcast because it's so insightful. These guys do a great job covering the Southeast market, especially in Florida. Joe, we really appreciate that. Guys, if you've not done so already, please go on to the iTunes Store or onto the Google Play Store and leave us a message, leave us a review and a note, and we will read it on the air. And thank you for that. But it is definitely helping you guys as well. Steve, we've got a great guest today, and why don't you talk a little bit about him?
Yeah, so today's really interesting because we've been going to be communicating from Tampa, Florida with our guest who is in Europe. He's moved to Europe, but still continues to invest in Florida where he's been successful, and he's still bullish on Florida. Albert Auger is a 30-year professional in the commercial real estate business. He is an investor and an author. He recently wrote a book called Pure Profits, Pinpoint Winning Properties, Think Like an Investor, and Succeed in Commercial Real Estate. Albert, welcome to the Invest Florida Show.
So, Albert, talk to us. Offline before we got started, you said you're originally from Boston, but you moved to Florida. So tell us about that and how you ended up in the state.
I came to Florida right after high school because I was a golfer up north. I was a golfer and a hockey player. Golf was pretty big, so I ended up going down to the University of Tampa and played golf on the golf team and got a good education in business at the same time. And while I was there, I got into commercial real estate right away. One of the professors at the university, I guess maybe he liked me. Maybe I gave him golf lessons. He liked me for that. I don't know. Yeah. But then I went to work for his company right after, and basically just started as the grunt, basically doing research work for him. He was doing limited partnership offerings in real estate, and so that's how I got started, and I just kind of grew from there.
And what kind of properties were you working on with him where you started off and cut your teeth?
Yeah, interesting. I started off with in commercial real estate. The first property I had was a client of his who had a property just north of the airport there in the industrial center. It was an industrial piece of property. Once I got my license, they kind of gave it to me and said, okay, here's your property and here's the client. Go sell the property. And I said, oh, great. This is going to be awesome. I'm going to make a ton of money here. And this is going to be just great as a broker. And then I started putting the package together to sell it. And then I went and started meeting different potential buyers. And I remember these one guys called me and said, yes, we have our warehouse is kind of behind your property or near your property. And we'd like you to come over here and talk about us buying that property. And I said, okay, great. So I couldn't get over there fast enough. And they had all of these aerial photography out that dated back 20 years. And so they said to me, you see this aerial here? I said, yes. And they said, what does that look like? And this is your property right here. They were pointing to it. And they said, what does this look like? And I said, looks like it was a lake. And they said, yes, it was a lake. And here it is here. This is 10 years later. And what does it look like? And he says, and if you look at the airport, what are they doing in the airport? And I said, oh, it looks like there's a lot of construction going on at the airport on the runways. And I don't know but it doesn't look like a lake anymore. He says, no, that's where they're dumping all of the concrete from the runways. They're dumping it in your property right now. Gosh. I said, but it must be taken out. It must be taken out by now because look at it. It's just nice grass over there. Yeah, but it wasn't. And so they weren't the buyers anyway. But I had to get an engineer involved and to try and find out how am I going to sell this property that's got this going on. So we had to do a lot of studies. Long story short, it ended up getting sold a little bit longer than I thought. But then that led me to the next property. That's kind of how it then just kind of kept going from there.
And were you operating as a broker then, or were you?
Yeah, I was an associate with that guy's firm because I was only at that point. I think I was only maybe, I don't know, in my early 20s.
And so, how long were you doing brokerage before you started buying to? I don't want to call it fix and flip because your strategy is really not fix and flip. It's small period holds. Yeah.
Yeah. It just kind of evolved. I can't remember, because from here I ended up working for a large developer in Fort Lauderdale. And then I ended up getting headhunted out of Fort Lauderdale from a client that I actually did some work with in Fort Lauderdale, and I started there, and then started with my own company, and everything became kind of a progress. It was like, okay, if you want to put a little money in, like $10 into this project, you can put $10 into this project, and we'll give you a 0.00001% position. And that's how it evolved. And then it just kept getting a little bit more, a little bit more, and a little bit more.
So, Albert, tell us about the first deal that you did and what you learned from that experience.
Well, the first deal that I did, where I was actually an investor, and turned out to be okay, but it was quite a scary one. It had an environmental problem on it, and many developers had walked on it before I got to it. The tenant, which was a freestanding drugstore chain in Florida, this was actually in Florida, wanted to go there and couldn't find a way because of the environmental contamination. So we did some research on it. We got the state involved, and we got comfortable with the problem. And the tenant got comfortable with the problem. We brought the state in, and the state asked us to put some monitoring wells in because there was groundwater contamination, which it was an old gas station, so they suspected that the tanks in the ground were what was causing the groundwater contamination. So we did that, and nobody else wanted it, so the price was pretty good going in, but there was a lot of risk with it. But we were able to look at all of the risk and look at what it was going to take. And kind of like I mentioned to you guys before the call, it was like the old poem by Robert Frost, "The Road Not Taken." We made a choice. We said we can either go down this path and not do it, or we can take a little bit of a risk, satisfy the tenant, and do it. And so we did. We did it. The tenant was very satisfied. They actually gave us a couple more projects to solve their problems with that they had other developers on that walked on it. And then we held it for 5 years. The state monitored the contamination. After we had built a new property, we took the old tanks out of the ground, and everything cleaned up in about, I would say, 5 years, if I remember. And then we sold it for much more than we thought we could get for it.
Did you sell it as a cap rate investment? Did the tenant stay?
Yeah. That's kind of how we operate. We operate with quality tenants with good credit, and then we sell it to those guys that want like a bond. So yeah, we sell it based on the cap rate, based on the interest rates that are currently available. So if we can initiate it a little bit higher and then sell it for a couple points lower, then we can make pretty good money.
And so are you an opportunistic buyer of any asset class, or is it only retail that you have interest in?
No, we did a lot of other stuff. That's changed now, though. We're still opportunistic. We look at apartment complexes. We look at residential stuff. We look at much bigger stuff, too. Now with COVID, that changes a lot of different things, too.
So let's talk about that a little bit. Like, your strategy pre-COVID and then post-COVID. Like what were you doing up until January 15th, and what's your position now?
Pre-COVID, we were also opportunistic. We had to make sure that we could initiate this project at a cap rate that was good for us, because our exit strategy was always defined going in that we were going to hold it for 5 years at the most, and then we would take the interest rate risk and then but sell it. So we had to see what the spread could be, estimate what the spread could be in 5 years to see if we would get involved in this property or not. Now it's changed a lot of things. Office was always tough unless you had super quality tenants, but now it's completely different. I mean, I'm seeing so many reports on the news channels now that are saying how there's going to be a lot of more work at home. They're finding that there was a lot of efficiencies. So I think some of these companies, these bigger companies, are seeing that they don't need the same kind of office space that they used to need. So office right now for us is a wait and see. I think there'll probably be some opportunities because of that. And I think in the long term, office might be a good play. You know, you've got the hospitality is tough right now. So there'll be some opportunities. You know, with volatility, there's opportunities.
Yeah, no doubt.
So that's what we look at. We're more geared right now towards residential and land and development of residential projects right now.
And you're in Europe right now, and that's been fairly recent in terms of the scope of your career, but you're still buying Florida property. Why don't you talk to us a little about that? Like what you like about Florida and how you ended up in Europe?
Yeah, Florida, I have the same exact strategy in Florida. Well, with one caveat, Florida is growing. Florida's population is growing, and it's growing pretty rapidly. So that opens up a lot of opportunities, especially in the residential side. And Florida, to me, has always been on a uptrend in real estate. I mean, yes, it goes up and down, and like we had the crash in 2009. But it's in general, if you look over the long term, Florida real estate is generally up. So I'm very, 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 very bullish on Florida real estate. I think you can't go wrong with Florida real estate if you do your homework and you have your strategies put together.
Mm-hmm. And what types of assets? I know you said you geared towards residential and land. So on land, is it buy and hold and waiting for the growth to catch up, or is it to develop?
No, I have a theory that money needs to move. And one of the things that I learned from my economics professor at the University of Tampa there was that one of the most important things, yes, you know, he was talking about supply and demand is very important. Supply and demand is very important. But the most important thing, and this stuck in my head, was the velocity of money, how fast money moves and how fast money changes hands. So we don't buy anything to hold on to. We like to keep our money moving and working hard. Because when it moves, it goes from this investment to that investment and works hard. There are other people that don't like the risk that's involved with that, so they like the more safer. They would rather just put their money into a 6% or 5% or 4% or 3% property and go play golf.
Talk to us about your book. You know, when you wrote that, why you decided that you wanted to write it?
I wrote the book because I wanted people to get a better understanding real estate and commercial real estate in particular. And because I was really tired of I got hundreds and hundreds of mail from commercial real estate brokers in the different projects that we were doing, and every one of them said prime property. I'm sorry, but every property is not a prime property. So I wrote the book to kind of define a prime property and to give some information as to how the numbers kind of stack up. And so I wanted more people to learn it and have it as information so that they could make a good decision if they were buying, and if they were a broker, maybe they could learn something about how investors think. And that was the title of the book: Pinpoint Winning Properties, Think Like an Investor, and Succeed in Commercial Real Estate.
So your book is targeted to brokers, or is it targeted to investors?
It's targeted to both, really, yeah, and it's also targeted to the younger people that are just kind of starting out. Because I tell the story at the very beginning of the book that when I first started in the real estate business, I had very little money, and I was eating spaghetti dinners 3 nights a week, and I had that budgeted, and I knew just how much I could spend. So it starts at a very, very nothing state and goes through the process of finding property, what you have to do to find the property, how to analyze the location, and how to analyze the numbers and the pro forma, the future of the property. It was in no way written as a get-rich-quick kind of thing at all. It was about hard work. And here's the things you need to do. You need hard work, you need information, and you need to know how to put the deal together. And so that's why I wrote it.
Where is the book available?
It's on Amazon now. It's only available right now. It was available in paperback, and it went through a couple printings in paperback, but now it's just available on digital, Kindle.
And is that an evolving book that you're continuing to update, or when was the last time that you've updated it?
I updated it a couple of years ago, but I will say this, that these practices that I outline in the book and these steps that I outline in the book are time-tested and they're proven and they really don't change.
Talk to us about some of the skills for someone wanting to be an investor or getting into commercial real estate. Like, what are the handful of primary skills that someone needs to possess?
This is a real creative business. I think you have to be very creative and see kind of beyond what everyone else is seeing. There were so many times when I would look at a property and I'd be driving with other brokers and I'd look at a property and I'd say, what about that property? And they say, oh, no, it's too small. And I say, well, how big is it? And they go, oh, I don't know, but look at it. It's too small for what you want to put on there. I said, oh, okay. And then I would go away and go into the land book and get the dimensions of the property and do my own layout on the property. And I'd say, no, it's not too small because it's an optical illusion. It looks too small. But when you start putting the buildings on, it wasn't too small. So you've got to kind of be creative and not take anyone's word for it being real. You have to do your own research. And that's what I always did. I always did my own research. I wasn't afraid to work. I worked a lot of hours. I would be driving at night, driving around. I would tell my wife that I've got to go out and go to work after dinner. And I'd go out and drive around for 2 hours just to look at the market and see what what businesses were doing what, where, when, where the people were.
Talk to us about the one point you made that I thought was interesting, where you said every broker will tell you what a prime property is. And what are some examples where you've seen it totally different and that would help people in evaluating what is a prime property?
Well, and I talk about this stuff in my book. And again, I know that the brokers are there to market the property. Their job is to sell the property. So they'll do what it takes to sell the property. My beef with that was that, yes, okay, I understand you're trying to sell the property, but let's be real. You can't say it's a prime piece of property without identifying the use that's going to go there, without identifying the numbers and the financial part of it that's going to go there. Just to say that it's a prime piece of property because it's located in spot X doesn't make it a prime piece of property, in my opinion.
So you're headed back and forth between Florida and Europe. Tell us a little bit about that. Like, how did you decide you're going to leave the state, you're going to go to Europe, and you're still participating in real estate in Florida, so we're going to get into that in a minute, but talk to us about how you made that decision. You're just going to make that jump over to live in Europe and continue to deal with properties here in Florida.
I had traveled here a few times, and then I just thought, hey, it's kind of cool. I kind of like it. So I did. That's it. There's nothing, no more beyond that.
So it's just a lifestyle thing, huh?
Yeah, it's just a choice, a lifestyle choice. And I also said that once I get to learn the markets here and understand the way they do business here, then I could probably maybe do 1 or 2 or 3 or 4 or whatever real estate transactions over here in Europe. But it takes a while. You have to get to know the market, which is what I've taken a couple of years. I didn't jump in. I took a couple of years to really try and understand and figure out how they do business. I met with tons of brokers, tons of investors, tons of private equity firms, tons of lawyers, bankers, real estate owners here, just calling them up and saying, hey, here's who I am. And I just wanted to come by and talk a little bit about real estate here in Europe. Can I take 15 minutes of your time? And they said, yeah, sure, come on over. Or some said, no, go away. But then I'd go over and, yeah, really. And I'd go over and, the 15-minute call sometimes was, or the 15-minute meeting sometimes was only 5 minutes. And other times it was an hour and 5 minutes. So, but the purpose of it was to learn. And through it, I developed a good network also. that's all part of, I think, learning the real estate business. And if you really want to do it well, you've got to be able to do stuff like that, where you just call someone up and say, hey, I don't know you, you don't know me, but I'd love to take a few minutes of your time and get to know you. And here's a little bit about, and some guys, I got their secretary 5 or 6 times before they were able to, before I was able to get to them. Some I didn't get to at all. Some would call me back 2 months later. So it's that perseverance, I think, that you need to.
Yeah, it's another one of those skills for an investor. I mean, you've got to, and investor and broker alike, it's consistently and persistently pursuing your goals and properties. It's not making a telephone call and say, "Oh, they didn't call me back," and moving on. It takes many touches to be able to consummate a deal and to even get someone to a point where they will trust you to be able to do a deal. And I think that's where a lot of both investors and brokers drop the ball, is they just, the person never called me back, and they don't follow up, and they get scared. They're scared of the telephone. They're scared of rejection, and that's a key point, I think, to successful investors. Would you agree?
Well, it's more than that, because what Albert's doing, so many people just relying on internet these days, and Albert's picking up the phone and making a personal connection and meeting.
Yeah, I mean, it's a combination. Yeah, there's some emails involved too, but I think there's nothing better than the telephone. I think that gives a little bit of an extra layer of professionalism, I think. It's easy to ignore an email. It's a little harder to ignore a telephone call, especially if it happens 2 or 3 or 4 times. And also the information that you gain. I mean, I talk to a lot of high net worth individuals over here and some PE firms. You really get a feel for the market and what the money's chasing, so to speak, over anywhere. I mean, you can do it in the U.S., you do it anywhere. I mean, I think that's a real key way to learn about a market and learn fast.
Talk to us about Florida. What markets? And let's talk post-COVID a little bit, but I don't want to, get lost in the weeds in COVID. But what areas of Florida and then asset classes also do you like? And when you're able to get on a plane and you're able to kind of get a little bit freer and from the COVID situation, what are you going to be tackling first?
I like Florida. I lived all over the state. I lived in Tampa. I lived in Orlando. I lived in Fort Lauderdale, that whole South Florida feel, and I lived in Naples. So I've got a good feel of that whole state. And I like from Orlando south, and I like closer to the coast as possible. However, if you're looking for land, you're not going to find it. So I'm really high on residential land in Florida, whether it be multifamily, single family, golf course, community land. I'm really high on that. And then as far as some infill retail spots, I would take a look at also, as long as I have the credit-worthy tenants. I don't want to do any non-credit or local stuff at the moment, mainly because I'm not there enough to manage it.
Sure.
Because it's a little bit more management intensive. But I would say for someone starting out, it's great if you can find yourself a little acre on the corner of a pretty well-traveled street, build yourself a little retail center, whatever, 5, 6, 7,000 square feet at most, and rent it out. I think you can do pretty well doing that.
Yeah, and it's the dire. I'm curious as to your position on this, but the dire predictions of retail. If you pick up the paper, and whether it be the commercial real estate news or it be the regular news, the retail is going to hell in a handbasket. It's never going to come back. I think these are absurd predictions.
Yeah, I've been hearing that. For 20 years. Ever since the internet's come out, I've been hearing, retail's done, it's over. But the bottom line is, to me, people love to shop. People like to go into a store. They like to look at something. They like to touch and feel it. And so I think it's always going to be there. Is it changing a little bit? Are some of the bigger boxes having their problems? Yes. But I wouldn't get involved in a bigger box anyway. But I don't think it's going away. I think it's going to be there. I think a key is if someone wants to try and find a way to make some money on the retail side, I think that some of these big boxes, if they can figure out a way or what the repositioning is of a vacant big box, I think they can make a lot of money doing that.
Yeah, I completely agree with you. And it's, and now with COVID, you have the reaction from a lot of investors and the media talking about how, look, this is just the final nail in the coffin for retail. It's going away forever. As long as you have 40,000, 45,000 cars or 10,000 people walking by a retail shop every day, that is not going away. I don't know how many times I can say that. It might evolve, and you're seeing the retail that's getting hit the worst is the covered mall. And what you're seeing in the covered mall is all sorts of ingenuity and creativity that you had mentioned earlier in the discussion of how do we work those centers. So the Sears and the JCPenney's, yeah, they're going away. They're getting knocked down. They're being converted into whatever. You're seeing multifamily. You're seeing, going into those Sears boxes. You're seeing, condominiums go in, maybe office going in, other reworks of those large box stores. But the small stores, the internet, or the Amazon proof stores, the delivery of haircuts, of restaurants, of that social interaction, that is still going to be strong. I don't care what. That's going to end up being a strong aspect. And I don't know how you feel about it, but I just think that whole mentality of, don't get into retail. It's actually right now you have an opportunity in Class A spaces because there's long-standing concepts that were distressed anyway. Like let's talk about Applebee's. It's in Chili's restaurants. They're in, many of them are in great locations, and they were distressed before COVID. COVID is accelerating the downfall of those concepts. And we've seen numbers of, Steak and Shake fall. But I can tell you, I've been in this business for more than 30 years. I can tell you the most challenging thing in retail real estate or any kind of real estate is finding Class A locations, and they're coming available. Those spaces were coming available anyway. Eventually, they're just happening now. It's being accelerated. And if you think that all that traffic and foot traffic is walking by those spaces is just going to be worth zero, I mean, then good. I'm going to be the person that's stepping in and buying it. I don't know how you feel about it.
Exactly.
Yeah.
This is right. Yeah, you're right on. This is exactly right. There's tons of opportunities there. I agree with that. It's not going away.
Anytime there's a dislocation, and really some of those things will happen in office too. I mean, with all the dire gloom about office isn't going away completely either. It'll evolve, it'll change, but there are opportunities. What are your thoughts about office?
Office, I was never a big office guy. I was many years ago. I was with Lincoln Property Company in Orlando, and they're office guys, and they did the SunTrust Tower, and I was involved with the retail part of that component on Church Street Station a little bit with them.
Oh yeah.
But office to me was kind of boring. I never saw rents never really went up. And if you look at the stats, you'll see that office rents were kind of flat for a good number of years. So it was always boring to me. However, now, I told you I'm a value add guy, and when everybody goes to the right, I ask them, why are you guys going right? I'm going to go left. So I say that because, however, with this COVID thing going on, I'm hearing a lot of negativity on the office side. So that would force me to have to go look at some stuff now and reevaluate office, because maybe they're having a reevaluation of the properties, and maybe you can pick one up for less than the valuation might be better for a buyer now.
Yeah, buy low and sell high.
It'll take a little time to work its way through the system. I mean, these property owners in many cases haven't come to realize or feel the effects of it yet. It's just, typically that sort of unfolds 6 months down the road, although you start to see some of it.
Yeah, office is a very stable investment too. I think I don't think it doesn't move much.
Yeah, Albert, I'm going to ask you one more question, and then we're going to let you get on about your evening, because it's actually weekend there. It's 5:00 somewhere. It's 5:00 where you are right now. So
I'm about ready for a beer.
Yeah, I am too, and it's 11:00 here. Let's talk a little bit about finding partners and where you are in that process. Do you have kind of your fixed partners that you're doing deals with right now? Or are you still out looking for people to do deals with? And if so, how do you go about trying to network and pick up guys who are interested in investing with you?
Yeah, I have my set group of guys that I work with. However, they're getting older and some are dying, so it's changing. It's changing a bit. So I'm always on the lookout. I do a lot of my own networking when it comes to that kind of stuff. I'll call up PE firms, or I'll call up someone who knows someone, and just talk to them and, tell them this is what I do. And, I don't have any spot right now, but if you're interested in sometime investing with me, then that's great. I'm not a good partner, if I could say that. I don't like to pay partners a lot, and partners usually want a lot. I've had some doctors that are partners, and I have to tell them sometimes, do I ask you how to do heart surgery? Please stop. And
we deal with that all the time.
Oh my God, they're the worst. Yeah, but I'm always open to new partners. I'm always open to new partners and bringing new people into the deal. I'm very straightforward. I'm very honest. I'm open with the deal. Here's the deal. Here's where it is. Here's how much equity that's available. If you want to throw some equity in, here's your percentage of the equity, and based on this valuation and your numbers and the returns and stuff. And if you're happy with that, great. But if it doesn't turn out that way, don't sue me. And if it turns out better than that, don't sue me either.
Okay.
So,
the bottom line is don't sue me.
Yeah, exactly. Because partners can be funny too.
Yeah.
I've got partner stories too. You want to hear a partner story?
Yeah, go ahead. Shoot.
I had a partner one time. He was in the project with us, but he wanted to get out of the project sooner than we were ready to exit. And I kept saying to him, no, please don't. You don't want to go yet because we're talking to someone. We're talking to this other guy, and I think he's going to buy it. And he was insistent. No. I want to get out right now. I said, well, your shares are only worth this much at the moment, but if this guy buys it, they'll be worth double what you're going to get now. So I think you should stay in. No. I want to get out. I want out right now. And, we went back and forth for days, and I told him, no, you can't, because we've got a buyer coming in and this looks pretty good. And anyway, he opted out. The buyer came in, and he was an upset partner. I said, but you wanted out.
Yeah.
So there's all kinds of stuff like that. Or, I don't like the management of partners.
Yeah, no, I understand.
You need psychology 101.
Yeah. So, as long as someone comes in with their eyes open, if they want to come in with me, I'll show them everything. Their eyes are wide open, and that's it. And just be happy like me, because I take the same risk that they take.
Yep.
Sure. And you've got the pressure on top of you also.
Yeah. And sometimes it's good, and sometimes it's not as good as we thought. One of my partners was really good. He always said, as long as you're making $1, you're okay.
Yeah.
Yep. So Albert, if people want to reach you or get your book, or how can they contact you or want to do a deal with you?
The book's on Amazon. They can go to Amazon and look up the book Pure Profits. My author title, pen name is called Al Auger. So they can go and get it there. They can also find me on LinkedIn at Albert Auger. And if they want to talk to me, I think the best way to get in touch with me is to go to LinkedIn and connect with me through LinkedIn. Awesome. And I'll always get back to them.
Yeah, that's how we found you, on LinkedIn.
Yeah, I think it is. Yeah, within a set amount of time, I'll get back to them.
Albert, really appreciate the time that you invested with us today. Anything else before we let you go and have your 5 o'clock beer?
Well, I hope it was informative, and I hope it helps your listeners. And that's it. And that was Albert Auger, author and real estate investor,
syndicator too. Stephen, what were your thoughts about listening to Albert?
Well, listening to Albert is an interesting story of progression, how he went from being a broker to a developer to an investor. But like many successful people, his model is really keep it simple. He has a simple strategy. It's value add, stay in the property for 3 to 5 years, stabilize it, and then sell it. But he did leave us with some nuggets, which is to go out and do your own research. Just don't assume that because somebody says it's prime property. Ask why is it prime property. And the other important thing that us as brokers often forget, as well as many other people, is get on the phone and talk to people. You learn a lot more, or better yet, have a meeting. Internet's great, but you get a lot more out of a personal conversation.
Know me, trust me, like me, do business with me. This is a repetitive theme. People think that digital experience is going to replace human contact. You are wrong. Does it help? Yeah, man. You can interact with people and meet people and get leads, and all that stuff can help you by internet. But at the end of the day, most people are going to want to get in front of you, get you on the phone, see you in person, and look you in the eye. That's not going to change. And I think that was a big point that Albert brought home. The other thing for me is Albert's a man after my own heart. He's got 1 foot in Europe and 1 foot in Florida. He's coming back and forth. That is the type of lifestyle that real estate can lead to, that you can do your business and have a cash flow. People call it passive cash flow. It's never passive. You always have to be somewhat involved in it, but it does give you some degree of flexibility to live in other places and have other experiences, because you can get a revenue stream, a cash flow stream. And that's certainly something that real estate, unlike many other businesses, allow you to experience. So good on Albert. Stephen, Albert was a great guest. Talk to us about where folks can listen to other great guests.
We have an encyclopedia of information. We've been doing these podcasts for several years now, have hundreds of episodes, and the best place to go to get this education is www.investfloridashow.com. Also, check us out by going on your mobile device and download the app so you can listen while you're mobile.
Stephen, you're very fortunate to have recovered there, to actually got our website right. It's been so long since you've actually read a closing here that I'm fortunate that at least you were able to remember and recover.
The older we get, the harder it is to remember all these passwords and websites, but I do remember my own.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.